Welcome in, everybody. Thank you for tuning into episode 2 of our new podcast, Charts and Checks. We are your hosts, Alvaro of the Bilingual Stock Market channel, and I am the gorilla with glasses, Don Foyani. Alvaro, how are you this afternoon?
I am doing fantastic. How about yourself?
I'm doing great, thank you. So, in this podcast, we like to look at your favorite stocks from a fundamental, technical, and financial point of view. Today, we are going to be covering TSM, which just reported earlier this morning, Soundhound, and Sofi. Alvaro, how about we go ahead and look over the most recent quarter?
Absolutely. So let me share my screen here. Let's go see Taiwan Semiconductor earnings report. So here we are. This was a very good report. I guess that you already took a look at it.
Yes.
So revenue growth, 44% year over year. $30 billion net income, up 60% year over year. EPS up as much as net income as well, 60% year over year. Guidance on revenue for Q3 of 2025, way above estimates, $33 billion versus $31 billion. Gross margin, 57.5%. Is what they are guiding for on Q3 of this year, above estimates, which was 57.2. I mean, pretty much nothing to complain about this report, as far as I can see, other than the capital expenditures, which came out like way higher than expected. But when you are making revenue grow like this, I mean, this is an exceptional figure, 44%. Year over year growth. I think that you're, for the most part, justifying your capital expenditures. What do you think about the report?
I think it was a solid report. We have to keep in mind that this stock coming out of April, I think went into the quarter up 80 to 85%, if I'm remembering right. I think it's now up 90% coming out of those lows. In my opinion, the stock market's not stupid. We expected a lot from TSM, and TSM delivered. It ended the day up 3. In my opinion, if we do end up getting that Q3 pullback that I think you and I have been waiting for, TSM is something that needs to be on your watch list, especially if you don't have any exposure to this already.
All right. So the stock is trading at all-time highs.
Right.
You have some interesting information
yes,
about,
let me pull it up for us.
About the valuation of TSM. So let me... Yeah, I am no longer sharing my screen, so you can go ahead and do it.
Got you.
Awesome.
Wrong screen. Apologies.
All right, that's fine.
Let's try. So... we're going to talk a little bit about TSM's valuation versus the field.
Dan, I think that gorilla, I mean, you are that gorilla, right?
Yes, I am the gorilla.
There you go. With glasses?
With glasses, my friend. Sometimes they come off, but not always.
There you go.
Fun little inside baseball for you. The logo that was developed here, I had my friend Alex Butt. She's extremely talented. That is actually based on my face.
Oh, really?
Yes. We made a gorilla that is based on the rough outline of my face. We added a little hump.
There you go. So that's your gorilla version. That's okay.
That is me as a gorilla for all of my people.
Awesome. So what do we have on this chart?
So what we're looking at here is a line graph of TSM's next 12-month earning next to the VanEck Semiconductor ETF. So it's basically TSM versus the field.
Forward P ratios in this case.
Forward PE next 12 months.
Okay, perfect.
As you can see just by looking at this, it's a pretty directly correlated graph, which makes sense. TSM is a semiconductor company. It should trade correlated with the sector. It'd be really weird if it didn't.
It is a big company. I think that it joined today the $1 trillion club. If I'm not mistaken.
That is what I have. Some people say it's a little bit south of it, but I'm going to call it now. It's in $1 trillion company. Congratulations, Taiwan Semiconductor.
Congrats on that, for real. Yeah.
Yes. So to add a little bit more context to this, we can take a look at when TSM is trading at a discount or a premium to the sector.
This is a great chart, man.
Thank you so much. On this chart, anything shaded in green is the period in which TSM was trading at a premium, meaning that the market valued their earnings more than the average of the cohort. And in red, it is the opposite.
So it traded at a higher valuation relative to the sector until 2022. Then we had a big gap down over there that I guess...
Take a guess.
It has to do with, we had a bear market in 2022. I guess that, it has to do with the invasion of Ukraine.
Yes, you are absolutely correct.
Correct.
So,
And then it started to trade at a discount relative to SMH, which is very
right.
interesting. There you
So,
go.
in my opinion, what happened was that leading into that event, the market was willing to overlook the potential for China to invade Taiwan. It just didn't seem like something that could actually happen. It was always something in the back of people's mind, but it wasn't until Russia invaded the Ukraine that it became real. So coming out of that bear market event, the market was a lot more cognizant of the fact that there was real risk to a China Taiwan invasion for the stock.
So if China doesn't end up invading Taiwan, this company is at a discount relative to the sector, which is very interesting.
Correct. So
Which is what
to
you
be
guys can
fair,
see
though,
here.
to be fair, I do think that Taiwan Semi should trade at a small discount to the cohort. I think it would be unwise to just completely place the probability of an invasion at zero, but 6.5 turns of difference is just too rich. You can see the SMH is trading right now as of today's close around 26.6 times forward, and TSM is just at 20.1.
After having reported, or
Just
after,
like that. Crazy.
after having posted a very good earnings, report. Yeah.
Yeah. So I'm going to quickly make the case about how TSM could maybe narrow that delta. So what I have here is TSM's revenue for the past 3 years and the contribution to their revenue from their largest customer. And I pulled this directly from their most annual report from 2024.
Yeah, this information is great, man. Wow.
Thank
Yeah,
you.
yeah.
So
Very information.
in 2022, the largest customer contributed 23%, the next year 25%, and just last year 22%. But that amount came out to 16.5 billion, 17.6 billion,
Yeah.
and 20.3 billion.
Can I make a guess about the largest customer?
Yeah, go for it.
Is it Nvidia?
I don't think there's another company on the planet that could write a $20 billion check. I understand it
Wow.
wasn't all at once, but we know where the money is in the economy right now, and it's all flowing through this AI story. And for those of you that may not be familiar with what TSM does, they don't design chips, they just produce them. Their biggest customers are NVIDIA, AMD, Broadcom, Apple, etc. They're in the business of just taking designs, fabricating the chips, and sending them back. So the reason this quarter was so impressive from a more macro perspective is that it shows the demand for AI chips is high. Now, what this means for TSM in particular is that if we believe that the GPU infrastructure build out will continue for the next 3 to 5 years, that means that we can estimate that that $20 billion check is only going to get bigger.
Yeah.
In my opinion, there is no revenue quality higher than it coming from NVIDIA. They are money good. No one is better. So if the market starts to appreciate that,
the absolute winner of of artificial intelligence.
100%. And I guess the point I'm trying to make is trading at 6.5, trading at a 6.5 turns discount to the market doesn't make a lot of sense when 20 to 25% of your revenue is going to be guaranteed each year and guaranteed to grow for the next 3 to 5 years.
So as long as Nvidia keeps going higher, TSM should follow suit for the most part.
Correct.
Yeah. So
I will stop sharing.
So would you say that investing in TSM as of now is like investing on Nvidia but at a discount?
Yes, a lot of people believe that investing in Broadcom was kind of like getting NVIDIA at a lower valuation. I think that was true. But in the case of TSM, it's almost literal because you know that all the checks being written to NVIDIA, a portion of it is going to filter down to TSM's top line revenue number.
Gotcha. If TSM can start manufacturing chips here in the US, would that diminish the geopolitical risk?
In my opinion, no. I think from what I understand, the fab they're making in Phoenix is not going to be used to make the 2 and 3 nanometer microchips
didn't know
that are responsible for AI.
Okay.
And also the factory is years and years out. So maybe. But I think I don't know. Maybe later on down the road, 5 years out, 7 years out, 10 years out, maybe most of the production of TSM could be based out of the US. So that, I mean, if you're thinking in terms of like
that situation could eventually happen, later on down the road, that could be a bullish case in order to buy TSM as of now, right?
Sure. In my opinion, I mean, I'll be honest with the audience. I'm long this stock. I've been long TSM for a long time.
Full disclosure. Awesome.
Yeah. And I don't really, I guess in my mind, it's not something that a China-Taiwan invasion is not off of the table, especially after what happened with Russia and the Ukraine.
Yeah.
However, if China does invade Taiwan, there are going to be a lot more second and third derivative problems that my Taiwan semiconductor position is going to be the least of my worries.
Gotcha.
So I'm okay with the risk given the potential upside, especially if the stock gets re-rated.
Okay, perfect. So let me go ahead and share my screen again. Let me go over the technical chart of TSM. Mm-hmm. There it is. So this is a very good looking chart above all the moving averages, upward sloping 5 DMA, 20 DMA, upward sloping 50-day moving average. So TSM went up today 3.38%, closed the trading session at $245. Would you buy it here? I mean, this is a very good looking chart. So Taiwan TSM made today a brand new all-time highs. So how higher can it go? I mean, I don't know. You set the price. $260, $280, $300. Would you buy it here or would you wait for a pullback? I mean, maybe, I don't know. The Qs are trading at all-time highs, so we are due for some sort of, we can make a case.
I think this is definitely a chart.
Mm-hmm.
Oh, sorry. I think this is definitely a chart that you can trade. If you're a trader, this is something you really like to see.
Yeah.
As an investor, I think you almost have to wait at this point for some sort of pullback. I think we are going to get one in the third quarter at some point. We never really know what's going to catalyze it. It just, these past 5 years, September has been a really, really bad month for the market. Mm-hmm. In my opinion, this quarter gives you the green light to buy the dip when the rest of the market has a bit of a washout.
I think that, with today's report, any dip on TSM has a high likelihood of being bought up. So I would be keeping an eye on the 5-day moving average coinciding with the previous level of resistance at 235. If that breaks, we also have a rising 20-day moving average at $227 coinciding with the previous level of support. But unless something unexpected happens here, I'm taking into account the earnings report that Taiwan showed the markets today. This any dip here should be getting bought up more likely than not, I think, right? It was a very good report. If we take a look at the valuation and some metrics of Taiwan, let's go see that. So, this is a big company, almost $1 trillion company. We have a P ratio of 32, a forward of 24. So this company just reported a year-over-year revenue growth of 40. How much was it? 40.
I think it was 60% on the revenue, right?
44%.
60 on the income. On the income. So 44%. This company. With not crazy.
No, not insane. So, a forward P ratio of a company that gross revenue at 44% year over year and net income 60% year over year. I mean, this is not a crazy valuation by any stretch of the imagination. I want to show you something. Dan, take a look at this. This is a cash cow, which is not the norm when we are talking about companies that are not Americans, that are not headquartered in the U.S. This company has a cash position of $91 billion and a long-term debt of $33 billion. Take a look at the way that they are increasing dividends. Look over here.
They're very well capitalized.
Yeah, they are buying back shares, capital expenditures, despite the fact that would be the only thing that we can, maybe point out as something that was not expected by the markets. Capital expenditures are not totally out of control. So it was a very good report. And this is going to be a direct beneficiary of the, artificial intelligence, I would say, mania that we're seeing as of now. I wanted to show you this. Let's take a look at the forecasts of the analysts. Take a look. 270, 1 year out, $258 and $240. And if we take a look then at the revenue growth that is being expected for 2028 and 2029. Take a look at the year 2029, 16%. year-over-year growth. And we're talking about a company that is trading at a discount relative to its sector. And despite the fact that it is trading at a discount, let's say an average analyst that is covering TSM is expecting a year-over-year growth when it comes to revenue of 16% in 2029. So the stock is trading at all-time highs, but the commercial execution of this company is outstanding. And I think that a potential dip in the case of TSM could end up being bought up.
Read.
So good. Anything else to say about TSM, or we move on?
No, I think we covered that nicely.
Awesome. So let's go over Sofi. So Sofi is a retail darling, and the stock is trading at $22 approximately, I think, as of now. In strict technical terms, Dan, it looks like Sofi is about to have a major breakout to the upside. Would you buy the stock here? What do you think about Sofi?
I will start by saying that I was long Sofi for a little while. I ended up getting lucky, quite frankly, and selling it at the beginning, or maybe it was in February of this year. So I sold it before the dump. I just didn't really know what I was doing with it. I got lucky and bought it low. I do like
what
the
price?
company.
What price did you get it at?
I bought it around $8 and sold it around 13.
It was a nice purchase, yeah.
Yeah, I mean, listen, I obviously sold it too early, but
you didn't have a crystal ball. It happens, so.
right. But at this valuation where it's trading right now, this is not something I'm interested in pursuing.
All right. Any bullish case? Did you like the company fundamentals?
I like the company from a fundamental perspective. They recently made an announcement they were going back into crypto now that there's more regulatory certainty. I think that's a wise move, especially for a fintech bank that's trying to solidify relationships with younger clients, younger customers. Okay. I don't really know what you call people you bank. We'll just call them customers in this case.
Customers, yeah.
Yeah, sure. And SoFi, and while that's all great, it's not the main story. SoFi, the main reason people know SoFi is because they service a lot of student loan debt. In my opinion, that is positioning them to become the Amex of the fintech, finbank space.
The American Express?
Go ahead.
The American Express? Express?
Sorry, the American Express. And I'll flesh out the analogy.
All right. Wow.
Basically, if you think about American Express, they don't have the same number of customers, the same scale that Visa and MasterCard have, but the average income of someone with an American Express card tends to be higher than that of a MasterCard or a Visa.
Gotcha.
Yeah,
I was going to ask you. We are supposedly getting a rate cut in September.
Sure.
I mean, that's what the markets are pricing in as of now. Do you think that would benefit SoFi?
Yes. Generally speaking, rate cuts tend to benefit lower, I hate to say it this way, but lower quality companies more than higher quality ones. At a very fundamental level, interest rates is really just another way of saying cost of debt. And if you're a company that the market believes will need to tap the debt market, then you're going to get a reward when the interest rate that you'd need to go to market for is lower.
Yeah, but so my point is, like, it is trading at $21, and we are about to go over the multiples that SoFi is trading at. Do you think that if we actually get a rate cut in September, that would push the valuation on further up? Or up further?
Maybe. Sure. I don't really have any strong opinions on that. I think at this point, the market knows the rate cut is coming, and SoFi has run so far so quickly. I don't know what 25 bips is going to do for it.
Gotcha.
Right. Yeah.
I don't know. Maybe if we get a rate cut, TLT goes up, maybe SoFi could, be a beneficiary from a mechanical standpoint. But let's take a look at the multiples of SoFi. So let me pull up here my screen. There you go. So we are looking at a company. Okay, let me change.
You're good.
Pull up here SoFi. All right. A $24 billion market capitalization for SoFi. Still a small cap company. That could change later on down the road. We have a P ratio of 51 and a forward P ratio of 68. So yeah, this is a rich valuation, no doubt about it, right? This company is trading at 68 times forward earnings. So it's not a cheap valuation. If we take a look at the most recent commercial execution of this company, we have a revenue growth, year-over-year revenue growth of 20%, which is, it's very good. Take a look at the revenue chart of SoFi. It looks super solid.
It's impressive.
Yeah, this is impressive. Except for, a quarter in which the revenue didn't grow, from a quarter-over-quarter basis. We have, let me see, net income growth went down 19% year-over-year on the last quarter that SoFi reported. Let me go see another information here. It's a rich valuation, so yeah, the stock has been going up. Do you think that this cryptomania that we're seeing as of now with Circle Group and Coinbase and Hood exploding to the upside has benefited the stock?
Undoubtedly. The issue I have with the valuation, and I honestly don't know what analysts project to be their EPS growth over the next 12 months or 2 years, 3 years, whatever the case may be. The part of the business that makes SoFi unique is that by making connections or making relationships early with college graduates that are anticipated to make more than their counterparts without college degrees, you're basically locking yourself in with customers that are going to give your bank a much richer deposit base, and with that deposit base you can then leverage net interest income, your loan book, etc. But those college graduates aren't going to be earning that potential and putting that money away for years and years and years. I just feel like a lot of this is too much too quickly, because the fundamental story that's supposed to drive SoFi is going to take years to play out. And while this crypto boom might give it some cushion and really could help it out, I just think at a valuation of, I think you said 60 times earnings?
Yep, 69.
69,
whatever it was. It trades with a forward P ratio of 69. It is a rich valuation.
I just don't see them growing earnings at a clip high enough to justify that.
Take a look at the members.
That's great growth.
Yeah, this is fantastic. Great growth. Take a look. Yeah, 10.9 million members or customers, we can say. Revenue is, growing at a very solid pace. Free cash flow is still negative, so this is something that the company has to improve. They are already making a profit, and they have been making a profit for the last I don't know like 5 or 6 quarters, so that's good. This is another aspect that I wanted to point out. So they used to have more debt than cash, and now they were able to turn this around. The company has a cash position of $4.2 billion. And a long-term debt of $2.5 billion. So this is good. And of course, they were able to turn this around because take a look at this. They are diluting, left and right. Take a look. Expenses are going up. So what I always think in terms of companies that trade with a very high valuation, which is the case of SoFi, is that as long as the markets don't see the demand for these kind of companies, getting to a top, in other words, while the story behind these kind of stocks remains a sexy story, multiples can expand until, like infinity and beyond. So I wouldn't be a buyer of SoFi at the current levels from a long-term investment standpoint, but since we have this potential gap to the upside down, I don't know. This is so let me share my screen again because we have not gone over the technical chart of SoFi. So I think, and despite the fact that this all-time highs of SoFi was made like a long time ago, almost $28. This was back in 2021. I don't know that.
It was SPAC mania. I don't know if the stock ever deserved to get there, in my opinion.
But take a look at this technical chart, Dan.
Oh, it's a great chart.
Beautiful. So this is like a super clean breakout. I wouldn't be surprised if this stock at least doesn't feel this next potential gap to the upside up
Sure.
to $25 ish. So the share looks very good. Let me take a look at the market structure of SoFi to see if we see something interesting here. So let me pull it up. I think that from a technical standpoint, we have higher prices coming up, and the story remains sexy. I think that this any dip on SoFi could also end up being bought up. Take a look at the market structure. The demand is through the roof.
That's healthy.
The supply is going down. So this looks
That's healthy.
this is pointing in the right direction. So in case of a pullback, where would you be interested in?
Yeah, no, I do want to be clear. Just because I think it's ahead of itself doesn't mean I don't believe in the story. I think there's a lot of money to be made here.
Okay. Take a look at this previous resistance that is pretty much coinciding with the 20-day moving average, $18.50. So
yeah, it's not for me right now. It's one of the stocks that's going to be so volatile. I mean, it's a $25 billion market cap. It's a real company, but it's going to be prone to getting whipped around. So I would wait for an actual flush. Like I want to see the VIX at 30, 35,
There
or
you
whatever
go.
it
Me
has to
too.
be at, high 20s, and I'll buy some.
By the way, there's a risk when it comes to SoFi. So the 10-year Treasury yield is trying to burst above 4.5%. If we happen to see, because this is a stock that is very price sensitive relative to yields. If we happen to see the TNX, the 10-year Treasury yield, say done, I don't know, 4.6, 4.7, or maybe getting closer to 5%. I mean, from a mechanical standpoint, SoFi could be under pressure. So, any price that you would be interested in order to buy the dip?
I would just have to. I would just have to see it. I have a feeling. Unfortunately, for me to be interested, I would need a washout in the market at this point.
Okay.
And when you get a washout,
we're trading at all-time high, so no one is going to complain about a 5% pullback or maybe even a 10% pullback.
Exactly. But I want to see all stocks come down. I want to see a broad washout. I want to see SoFi get thrown out. I want the baby to be thrown out with the bathwater, and then I'll go get it. I'm not going to bottom tick. I'm going to wait for this thing to retest a major level. Maybe it's that 20-day. Maybe it's lower. Maybe it's at 17.5. I think that's an important level for the stock.
Awesome.
And then I'll pick some up.
Agreed. Perfect.
Yeah.
Now we are going to go over Soundhound.
Yes. So this is a relatively new name for me.
Right. Bro, I don't know this stock. I mean, I have traded the ticker.
Sure.
And I think that this company is some way, somehow related to NVIDIA. Am I right about that?
AI, yeah.
I mean, for me, this is just a stock to
So
trade.
I'm gonna have to ask our audience for a little grace here. I did research past couple of days on this one. I really like the story, the idea that the promise of AI, not just Soundhound, but AI in general, is that we are going to make bad businesses into good businesses and good businesses into great businesses. And where Soundhound fits into that platform is they are basically providing an AI voice service. Right now, their primary customers.
What do you mean by AI voice service? You said?
Yeah, it's an AI chat voice.
Oh, okay. So what's
Here? I'll give you an example.
Yeah,
and
please.
it will make more sense. I'll give
Okay.
One of the easiest cohort to make a case for is actually in the food industry. They have contracts with QSR brands, so think like Burger King, Pete's Coffee, Torchy's Tacos, Chipotle. I think just signed with them. And the idea is that you will go to a drive-through and you'll be talking to a Soundhound AI
in order to
order your food.
Order food. Okay.
Right. So you're going to have, in the way this makes a good business better in the case of many of these fast food chains, is you won't need to have an employee to actually take orders. You won't need to train that employee. You probably get a better customer experience because there won't be any miscommunications if your AI is trained properly.
Okay.
And on top of that, where it really gets interesting.
What would be unique about this service? So
Say again?
What would be unique about this service?
So
because when I call my bank, nowadays, so I no longer speak to a customer service representative. It's like an answering machine, and you're interacting with the answering machine. If you want to.
Oh, so the idea here is that you wouldn't know it's an AI.
Oh,
it would interact with you. It would interact with you as if you were interacting with a human.
Wow, that's okay. So that's a whole different story. And
right.
You And maybe you would not notice a difference, right?
That in the perfect world, you don't notice the difference. And not only that, you have them be great salesmen. Like, let's say that I go to McDonald's and I'm like, I need some McCrispy strips.
Okay.
Love that from McDonald's. Tastes the same as it did when I was a kid.
Okay.
And Houndify, which is their voice AI platform, will look in the market data and see what people order with a McCrispy strip. And they might be, hey, would you like a chocolate shake with that? Because they know 85% of the time, if they're offered a chocolate shake with McCrispies, they're going to say yes. And I might never have ever wanted a chocolate shake, but the stats don't lie. And I'll be like, I never thought of that. Sure, sell me another $4 item.
Gotcha. So the interaction would be like more human. Let's just put it that way.
It would be more human, and it would also allow the opportunity for better cross-selling and upselling.
Okay. So and what's ultimately, in your opinion, the interest of NVIDIA in this company?
I'm not sure exactly what NVIDIA's interest is in the company. The issue that I have with the company, and you kind of said it, what makes it unique, I don't see a moat for Soundhound.
Okay.
So I'm not sure. We'll talk about the valuations briefly.
Yeah, because this is another retail darling. So,
Yes.
when this stock, gets going, it gets going. So,
And here's what people need to know, though. It's clearly pricing in a lot of growth. I think it's only a $5 billion company, so it's early. I'm not expecting it to be mature.
yeah,
no kidding.
Yeah, let me take a look at the company real quick.
Yeah.
Let's see what we see here. So, Soundhound AI, let me see.
As you pull it up, I'll keep riffing here.
Awesome, perfect.
You might think, well, Don, couldn't they sign a contract with Google, Amazon, maybe NVIDIA, Tesla, name your favorite Mag 7 company and become their provider? The answer is no. They all have one. Google's not walking away from Gemini. Amazon's not walking away from Alexa. Tesla's not walking away from Grok. And Apple's not walking away from Siri.
Gotcha. Yeah, but when you talk to all of those, I don't know, applications or voice applications, you know that you're talking, to an answering machine. So of course,
for the most part, those services suck. But they're not about to quit on those to basically sign a contract with Soundhound. With all due respect.
And by the way, this is a speculative company, so they haven't made any profit yet. And take a look at the price of sales, bro, 41. So this company, according to Yahoo Finance, has a market capitalization of $4.5 billion, which equals 41 times last 12-month revenue of the company. This is an excessive valuation, I guess. I mean, I can take a look at the revenue growth and stuff. So let me take a look at that real quick. Let me see. 20% on revenue growth, year over year revenue growth. You cannot justify a price to sales of 41, with a revenue growth of 21% year over year.
And the reason I brought up what I brought up is because there's no way that number gets higher. They'd have to sign the rest of the 493.
Well, I got to tell you, revenue is growing, huh?
But I mean,
on a constant basis.
At what point are you going to grow? You'd have to grow at 40% or more to justify that.
Yeah, 35% minimum in order to be able to justify price of sales of 41. So let me see how much money they're burning, because I'm curious about that. So let me pull up here Soundhound. Let's take a look at the financial situation of the company. There you go, Soundhound AI. Here it is. So take a look. At least they have they are burning money. So let's go see the net
Free
income.
cash flow is negative.
Oh, but they just made a profit, bro. $121 million. Yeah,
good for them.
Yeah, they just made a profit. And they have a very solid financial situation. So $245 million in cash and a long-term debt of $2.5 million. But I gotta tell you, so we don't have quite yet a forward P ratio. So according to Yahoo Finance, so that implies, and I can double check on that the average analyst that is covering the stock is not expecting Soundhound to become a profitable company, at least within the next 12 months. But I can also double check on that. So let me see the estimate for EPS. So the forecast. Let me see. No. So but hold. This is crazy. So. They are expected to be able to make a profit in 2025, but then they are expecting the company to start losing money once again in 2026. Correct.
So, Alvaro, here I think is the fundamental upside case for this stock.
Okay.
If you get analysts decide that this company can turn a profit, then this stock is going to do really, really well.
Yeah, I mean,
I just don't know if that's a bet I'm willing to make.
okay. Let's go see the technical chart real quick here. Let me see. And there you go. So Soundhound AI. I think it was running today. It was a runner today, I think. Let me see. So went up. Yeah, it went up today 7%. Closed the trading session at $12. I mean,
It's a good looking chart.
it is acceptable. Yeah, it is above all the moving averages. So over here,
No, it looks good.
yeah. I mean,
I don't hate that.
if the bulls if the bulls can consolidate above this upward sloping 5-day moving average near $12, maybe there's room up to this previous level of resistance at which Soundhound felt on 3 occasions near $13.50. It could keep running. I don't know, Dan. I mean, when it comes to these kind of, higher multiple stocks, I am still a bit concerned about yields going up because that could be putting downwards pressure over these kind of stocks. I don't know. I have this.
Listen,
I have an
these stocks
assumption. I have an assumption that maybe the 10-year Treasury yield could be bursting above 4.5%, and that could not be positive for these kind of stocks. The short looks. I mean, maybe we can see Soundhound going up.
Well, yeah,
going
Alvaro,
higher.
let's be fair. The stock was up 7.3% today. If you bought last night, you feel pretty good.
Oh yeah, 100%, 100%. Let me see if I have. No, I don't have Anchor VWAPs here, but we can take a look at that later on and take a look at the forecast. Dan. So we have 7 analysts covering the stock.
Don't mean to cut you off, my friend. Are you showing it on your screen?
Yeah. I'm here.
Perfect.
Okay. So 2 buy categories. Some analysts see Soundhound trading at $18 and in 12 months. Some others at 11, and the birds see Soundhound at $7. So, long story short, then, do you think that as long as the AI story remains sexy and Nvidia going up and stuff like that, Soundhound has more room to the upside based on that?
This is a great stock
based
to
on that
trade,
idea?
especially under those circumstances. Is a great stock to trade.
Gotcha. But you're not buying this for the long term, right?
No, for me, if I don't see the value in something long term, I have a hard time taking short term bets on them. It doesn't mean I'm going to short it. I really hope that everyone that's in it makes money. It's not my goal to see people lose money, right?
Gotcha. Yeah, 100%. So, that was Soundhound AI.
But
so
but
they are not doing anything disruptive, right? So,
here's the thing. I think what they're doing is disruptive. It's just not special.
okay.
So what I would characterize this as is Amazon risk.
Yeah. So,
To be specific, remember, have you been to a CVS or a Walgreens recently?
I have. Yeah. Mm-hmm.
Okay, I haven't. I Amazon all that shit. I have no problem.
I have, yeah.
I got Prime, 2-day shipping, sometimes overnight if I got $30 worth of goodies or whatever it is. I'm living in the future and I love it.
So
yeah.
So you believe that over time we're gonna have like fewer customers, like going to physical stores to purchase stuff?
Oh, 100%. If you look at a stock of CVS or Walgreens, you see it already.
Correct.
Amazon has destroyed those stocks.
Gotcha. So
The point I'm
in
making
the case
is
of
this,
Soundhound, you need like customers like physically going into the store. So that would be.
Oh no.
negative for the
What I
company.
meant to say was this: like Amazon ended up disrupting CVS and Walgreens.
Okay.
Amazon has partnerships with a bunch of small businesses that Soundhound would love to hire, would love to sign on as clients. If Amazon figures out Alexa and makes that into what Soundhound is trying to produce, they're just going to cross-sell whatever the Alexa voice AI platform is to those customers and steal all of Soundhound's potential business.
Gotcha. So this is for the time being, this is a stock that we can trade.
We can certainly trade
not
it.
Invest. Correct.
We can certainly trade it. I just wouldn't. I can't bless a position in this one.
There you go. Any idea about the stocks that we'll be reviewing next week on the episode number 3?
I haven't looked at the earnings schedule yet, so we'll take a look and we'll get back.
I think that next week we have Tessie reporting on Wednesday.
Well, then of course we'll talk about Tesla.
Yeah. We have earnings season is about to get like super interesting, and Netflix.
Yes, we're getting into the thick of it.
Yeah, correct. Netflix reported posted a great quarter. The stock is down after hours, but it didn't exhaust the expected move. So this is going to be an interesting stock. Tomorrow, more likely than not. We'll see.
based on what I read from their quarter, if this is down like 5, 6, 7% tomorrow, I'm not sure what I haven't
No,
looked.
no, the expected move was $70, bro, and it is trading down. It is down after hours, $20. So yeah, the report was good, and yeah, we'll see. So we have to keep an eye on ratings, because yeah, tomorrow we're gonna have analysts like lining up, upgrading the stock, or letting us know their opinion about the report. The report was very solid, so we'll see what happens tomorrow with Netflix, bro. Thank you very much for joining me.
And
once again. Go ahead.
Thank you, and I would like to thank the audience for tuning into our second episode. The gorilla with glasses is taking his glasses off.
There it is. If you guys want to join our Discord and our Patreon, the link is in the description box of the video. And also, if you guys want to read your papers, yeah,
you can find it at GorillaWglasses.com. It'll be posted in the description below. Also, look out. I am going to start a Discord of my own to complement Alvaro's, where I can put more of my macro thoughts. I do love sharing them with your community. They receive them well, but there's a lot of people that I know personally that are just interested in the macro thoughts and less in the day-to-day trading noise.
Okay.
So I'm going to create a space for them as well.
Awesome, bro. Okay. We'll be sharing with the audience the link over here. So thanks, guys. See you guys on next Thursday, probably.
Enjoy the weekend.
Yeah. For the third episode of Shirts and Checks podcast. Bye. Take care.
Signing off.